Bismillahirrahmanirrahim. Assalamu alaikum. I'm your host Nawaz Rajapakistani with your favorite weekly program Signature Talk. And today with me is my esteemed guest Mr Jamil Akhter, who is expert in property finance and property management, I will say as well. He will explain himself. We have done already two programs on the property, and today we are discussing that what will be the impact of these election results on the property market, and we'll try to cover all the areas, not particularly focusing on one or 2 points, but we'll try to cover all the areas in the property market in our program. As you know, we have a very limited time of I will say 1 hour program, so we have breaks and others, so you can say in 50 minutes we'll try to cover all these things. First of all, I will welcome Mr. Jamil Akhter to my program. Sir, thank you for coming into the program.
Yes, welcome.
Thank you for how's your days going nowadays?
Very good.
Thank you. So as we have done 2 previous program on the property. The first one, I hope you remember, we
Islamic
have
finance.
the Islamic finance. It was that, what was that difference between the Islamic finance and the regular conventional finance. And then after that, our second program was about the how can the first time buyers go ahead with buying a property, and what steps they have to go through. So it was a very comprehensive program, and I have a good understanding, and you can say I have a good feedback from my listeners as well. They enjoyed that program as well.
Actually, the first time buyers, even the program which we already did, it was not enough, because I dealt with first time buyers while they were buy the property, and also when they do the mortgage. So they actually know almost nothing to start with. So at the end of the process, they know a lot.
They know a lot. They know a lot.
So
I even didn't know those processes at that time.
And it's very easy for the first time buyer to go wrong in buying a property, and also in selecting the right mortgage.
So that program was very useful for my listeners, and I have a very good feedback, and I hope this program will help you to further decide what will be the impact of the election results on the properties, and what is the best time for you guys. You have to decide yourself what is the best time we can just give him. You can say this is just a disclaimer for my listeners that we are here just discussing and giving our point of view, which could be potentially wrong and could be right, but this will be our very honest opinion that what in our view will gonna happen, because as I'm from the property market as well. I'm in this market from a long time. I don't know that much about the property because I'm on the renting side of the property, so I'm not in towards the selling and buying of the property. But Mr. Jamil, who is expert, I will say, in buying and selling and dealing with his customers, so he knows very well.
Mostly London.
I can give you little bit impact of what will be the impact on the renting property. So from where you want to start, Mr. Jamil, today? Which thing you want to discuss about
I think we can just start with the overall impact of election results on the property market. So that could be the starting point, and then we can go a bit further.
I have one question. How was the property market before the election? Do you think either it was stagnant, stopped, or going down? What was happening?
We're starting with the London. London performed very, very well until 2014 and 15, and it was registering very heavy growth in the prices. In the prices.
However, the government they didn't like it because they were thinking it's making a bubble which could burst and it could trigger a recession or price collapse. And then they took many measures to control the heat Heat mean it's not the temperature heat. Heated prices, you could say. You see?
Okay.
They introduced many taxes. And the one of the tax was 3% extra on the landlords, the second-time buyers.
Okay, second-time buyers.
Yeah, and
it is on the property buy-to-let, I will say.
Buy-to-let properties.
Okay.
And the and also the increase in stamp duties. Then they also introduced some backdoors where people could save, especially the overseas buyers who could save a lot of money, pay no tax, and then make profit and go.
Okay.
So one of them was edit tax, which is if you are buying a property on an offshore company and you are living in that property and you have to pay higher stamp duty. I think it's 15%.
15% of the whole property.
Yeah.
Oh my God.
So that is one side is stamp duty, and also you if your property, it was, I think it was when they introduced the limit was higher, but now I think it's more than just over 500,000 or so, and the tax will be applicable on the valuation of the property, and you have to pay every year. I had a case where the tax, the property was around valuation was around 30 million, and their tax was for 200,000.
200,000. Okay.
Yeah. So
so they try to actually they try to
stop it.
They try to restrict the increase of the property prices. Actually, they want to.
Yeah,
I will say.
So one is it's a mixture.
It was going. Those property prices were not the real prices. Actually, those were the bubble. The word they are using, the bubble, it's mean like they are exaggerating the prices. That's why they try to.
Not exaggerating. It was actually to say it was forming a bubble.
They were forming
too much price increase. Some areas registering like 20% in a year. This is not sustainable. It is actually not good for the local buyers either. And eventually the rents also become unaffordable because the
property value is increased.
Anyone who buys, and then eventually if they can't let the property because they already bought a very high price, and then they will default on the mortgage eventually. There is a potential default risk. That's why they try to cool down.
I remember in 2008 in 2008 in the Leighton side area, the one bedroom flat was around 600 to 700 pound rent at that time, and I was renting out that at that time one bedroom flat, and then after that it in 2010 and 12 the two bedroom flat was around 800 900, but suddenly in 2014 I remember, you are right, that when the property prices were quite high, so the investors wants the return as well on the property, so the rents were very high. Now the rents are very high at the moment.
But the other thing, what happened after the session, the property market collapsed. The recession came in because of the property. And then the government tried to until the labor government, they were successful in actually controlling the impact of recession on the property. There were not too many repossessions like American, etc. The UK was performed very, very well in that case. However, the government changed, and the new government, the Conservatives, they introduced an incentive to boost up the market, which is called Help to Buy. Help to Buy was introduced in, I think it's 2012 or 13, and that had a major impact on the property.
Like it helped to sustain the property value.
Yes, it helped to grow the property prices. And then it
kept on going. Yeah, so it is started with that. It worked as a litmus to change the prices. Yeah.
One question is coming in my mind. It's about the same thing. There from 2014, you're telling that the property prices
so after
were
2014.
But I'm saying
from
before
2014, they introduced the taxes, but they were not implemented immediately, except stamp duty. Yes,
no, I'm saying before after 2014 and before these elections, there is a period of 3 years in which the British Parliament was deciding either we have to go out, either we have to stay in the European Union. Though in the referendum, the nation had already decided that we have to leave the European Union. So within these 3 years,
from which year?
Last 3 years, last 3 years after the referendum, last 3 years after the referendum, when the Theresa May did the election so that she can have a majority in the parliament, so that she can pass a bill like now Conservative have the majority, decisive majority. Now they can pass the bill, and now they are going out of the European Union on 30th of January. So I'm saying these last 3 years, after 2014, these last 3 years mean 2016 to 2019. So the property values were, you will say, stagnant, or they were going up and down?
We start with London first. So London had the biggest impact of taxes on London property, especially the prime London property, and it started cooling down from 2016. Yeah, and then the new 3% extra tax on landlords was also implemented from April 2016.
Okay.
So this was one of the major impacts on the prices. And then after this tax changes, the referendum came in. Yeah. So there was a combination of many factors that had a large impact on the property prices in London, in central London, greater London, and it started.
So what type of impact it was? It was going down,
going down, yeah.
It was going down.
It was going down, and then the proper uncertainty about Brexit started, because Theresa May could not actually had any deal,
decisive majority, and she couldn't secure a good deal.
And she had a snap election. She made mistake after mistake. You see. So it created a lot of uncertainty for the overseas investors, even the UK investors, and the people were very, very undecisive. Everyone was thinking that the prices are going down,
and wait for buying.
The people started to wait, and at the same time, the sellers, because they had seen such a high prices before, they were not willing to surrender.
Yes.
Yeah.
Yes.
So there was a lack of stock as well. Yeah. So that impacted the sales volume, and the sales volume reduced drastically during those 3 years to the end. And now Tories have an absolute majority in the parliament. It has removed maybe you could say 30-40% of the uncertainty.
I will say they have removed the 100%. Senator is removed.
No, not 100%, because we don't know what the deal would be, and still there is a chance of hard Brexit, and everyone fears, and the investors,
like at the end of the 2020 when they have to do all these agreements.
Yeah. So, but it will release some pent-up demand. The pent-up demand means that the people who are waiting for some certainty to come before they buy. Yeah. So almost all the major players in the market, they are expecting good future for the property for the next few years. Overall, it will not be as good as before.
Okay.
until the Brexit deal is done, and also any change.
When you're saying the Brexit deal is done, is you are saying about by the 2020 or the by
Brexit, we will have Brexit by 31st of January, and then we are in transition period.
In transition period where we are actually negotiating the agreements and these things, and real Brexit will be on 2020 because
so
end of 2020.
Hopefully it's not extended. So that is the uncertainty is still there. But yes, there are some players who, and also the individuals who are willing to jump in now, because they could think that okay, this is the right time.
They're willing to take risk at the moment.
So it's not that much of risk. If we had Theresa May's government, the risk was much higher. Now, okay, there is some risk, but also it's a greater chance overall that they will have a deal with Europe which is acceptable to both parties. So there are a lot more chances of happening that, because we have very strong government in the UK now. So you could say that the prices you should not expect going down anymore.
Okay, we should not expect these, that like the prices are going down.
It will be either increasing or stable.
It will not decrease. It will not decrease. You're right. Okay, for my listeners, actually, we are just near the breaks at the moment. In I think 45 seconds we have to go into the break, and my guest, Mr Jamil Akhter, who is a property and finance consultant, he's with me, and today we are discussing the impact of these election results that could be on the property market. I will give you some data after the break as well, that what other the people have they're saying about these election results and their impact on the property market. And if my listeners want to ask any type of question from my guest and from myself, they can give us call on 0333 and if they want to carry listen this program or the recording, they can tune into 94.0, or they can type in www.revivefm.co.uk and they can listen to this program there as well. So till after the break, Bismillahirrahmanirrahim. Assalamu alaikum. Welcome back to Revive FM 94.0, and I'm your host Nawaz Rajapakistani with the program Signature Talk. And today I have a guest in my studio, Mr Jamil Akhter, who is a property and finance consultant, and this is his third program with us, and we are discussing about the properties. And in this particular program, we are discussing about the impact of the election results on the property market and the property market value. We are mainly discussing on the selling's point of view, but I will give you the renting point of view as well. And during the break, I was reading some article as well, and I will quote you that one. But before that, if you want to join us in the program, and if you want to ask any question from my guest Jamil Akhter or from myself, you can call us on 0333 444 0940, and we are here to give you our reflection, I would say, on your question. For my listeners also, I want to add here, it's a disclaimer, you can say. The analysis we are doing is purely on our information and judgment. It could be wrong or it could be right as well. So if you are going to take a decision on the basis of this program, I will say, so you have to decide yourself. So welcome back to the program, sir. Jamil Saab, Assalamu alaikum again. So before going into the break, you were saying that the property market value will either remain stable or it will increase, but it will not go down. So it's a good
Most
thing.
Probably, but it's not true in every street, every area, every property. We are just talking in general.
In general, yeah. So overall, in average, you are saying the property value, in London, I will say the London property is always very hard. London properties are always very hard because they are always giving a very good return on the rent. They are always the occupied. It's not like about the north side of the properties, where the properties like if you invested, sometimes you don't find the tenants to move in to get a return on it. So
I slightly differ about London. Yes, London property, especially the central London property, is always the darling of investors. So every rich person wants to have a the piece of land in London. And so yes, it will. It has ever been very popular and will remain popular.
It will remain popular. It will remain popular.
And regardless of Brexit can hold people buying it, but it cannot stop people
buying.
Buying it.
Yeah, it's a very nice sentence, I will say.
Yeah. So, if someone historically, London has given very, very good returns in terms of price growth. Every 5 to 7 and in some cases 10 years property price double. But we don't see these sort of results in rest of the country. So for price growth or capital growth, central London, greater London has been very good, and hopefully they will remain the same in the future. Though we are less certain because of the new taxes if central London growth will remain the same as in the past or not. But still it will remain very, very popular and sought after areas in the world. For the rental, if someone is looking for income, they should consider north, in my view. They have to decide where in the north,
like either in the Manchester, Leeds, or these areas.
So they need to decide the right areas within the city where there is a demand and the property will not be empty, but yield is higher in the north, and it will will be more popular in the future. So this has been the case throughout. For yield, central London is not the best place, but capital growth, yes, it has been, and hopefully it will be.
It will remain like I'm just checking some data on the website. It's Zoopla website. I'm checking it on. Like I have put the one particular postcode in it, and I was saying in the last 12 months in that particular postcode there is the positive value change of around 3.16% in that area. So in London, I will say, yeah, you're right, the property value will stagnate for 1 year. It could be for 1 year or more, but it will not go down.
Yeah,
like from the previous trend, if you see
the rents, even in London, especially the central London, the rents are forecast to have the highest growth because they have been suffering previously. So the rents and the sales, everything was not doing very well. So the highest growth in rental is predicted in actually prime central London for the next 5 years.
Okay, the next 5 years it has growth.
Yeah.
So
if the hopefully like something like 15% over cumulative growth over next 5 years, and the rest of the country on average maybe 10% rental growth.
The one question is coming just as a layman student is coming in my mind, that when you have a higher risk, it means you have a higher risk to invest in someone, then you have a higher return on as well. With the higher risk, you get a higher return as well. Keeping in view if this theory, higher risk, higher return, so it's mean you have a higher chances of losing as well. But on the north side of the property, same as I'm checking on online as well, that on the north side of the from last 1 year, the property value is not decreasing. It's very fractional. I will say 0.3 or 4%.
Yeah,
0.34% the property value is increased. The risk is very low.
Yeah, so that is how it happens. Firstly, change happen in London.
Yeah,
and then it spreads.
It spreads.
It
Okay.
takes time for the change to transfer from London to
to
the
other
rest
cities.
of the
Yeah.
country. And then when now London registered negative growth within past 3 years, so it is spreading to the rest of the country. Though during that time some regions in the country were actually doing good, very good, but the growth in prices were decreasing.
The prices were increasing, but the growth. The relative growth was decreasing. Okay, I got
so it was
just for my listeners so they don't understand.
It was going towards stagnation and then decreasing. So,
but you, in your point of view, with these election results, the prices will go into the stagnation mode, but it will not decrease. Whereas I have
there are good chances of having some growth.
Some growth as well.
But it will not.
There will not be chances of to surge like
too much
surge.
Growth, So you can expect mostly in the London or Greater London region, like some players are expecting around 17%, 18%, some 24% over next 5 years growth in prices, which is quite a lot actually. They for something for a property, and then rest of the country less growth, maybe 10, some regions 10, some 12, 13, 14, 15. So it is pretty much good time to actually buy especially to live in, with much less fear of price collapse, even if you have a hard Brexit, because everyone knows now that Brexit is going to happen. So there is no doubt.
The different people have a different point of view. You are saying it will stagnate, and some people.
I'm saying there will be some growth.
There will be some growth. Like I was reading one article, and they're saying the property market value will be one of the main beneficiaries of the Fridays. Like on Friday we had this election. And
it is good news.
Yes, it was a good news because in my point of view, and the other people think as well, like the businessmen especially, they were saying at least they know what to do it, and business people know what to do it at least.
So as I said, that some 30-40% of this uncertainty surrounding the investors, minds has gone away now because of the very good elections.
Again, for my listeners, only we are discussing about the property. We're not discussing about the manufacturing industry or this thing. I don't know what type of impact they could have and how they have to cope with these results because of these imports and exports issues. In the property, there is no as such issue. You only have to import the money from anywhere you can do it. So. I was saying, there is an expectation about the surge in the property as well. So we can say both. Either the property market will remain stagnant, or there could be a little bit growth in it. There could be a little bit growth in it.
There would be most likely there would be growth in prices.
Most likely the growth in prices. So if the growth in prices, then there will be, I will say, the availability of the stock will be in the market as well. The people who wants to sell and make money out of it, they will do it as well.
I can give you just an example. For example, you are buying a 500,000 house. So today's date is, let's say, November 19. So no one knows where the election is. So in your mind, you don't know who is winning the election, what will happen? Many investors, especially the overseas investors or institutional investors, they were very, very afraid of, and the rich investors, the Labour government, because in their manifesto, they were not actually very much favorable to those sort of investors. Now everything have changed. We have a Tories manifesto. We have their announced policies. We know what is going to happen at least for the next 5 years. Now you are in a better position to decide, and you don't have much fear about price collapse, recession, this, that. You see, so you can buy with confidence, and you, as a result, you will negotiate the price less than before. To make yourself safe.
Right?
Now the chances of a deal happening is more.
The chances of deal happening is more.
So you can expect more sales.
Right.
Yeah,
Exactly.
And but still, it doesn't mean that people will not give discounts, etc.
They will give discounts.
But the chances of happening sales are a lot more than before now. It's a certainty on both sides.
Certainty on both sides now. For the buyer as well and for seller as well. Because before the buyer was saying, let's suppose if I buy today and after the election,
20% discount. Today they may say, okay, even 10 is fine.
Yes, 10 is fine. Because they know at least they will not go down. And any buyer who buys the property, he has in a hope that after 1 year, 2 years, if he wants to sell it, investor point of view, if he wants to sell it, at least he can make some money out of it. And now this uncertainty has been gone. This uncertainty has been gone. And because of this uncertainty has gone, it gives a boost to the market. I will say boost in a sense that it will make it stagnant. The property value will at least not go down.
You can expect some growth.
Not a sudden growth, but
not too much growth, but maybe from next year to we are still in 29. From 2021, it would be more positive, because by that time, hopefully, we will have had the deal with Europe, and some players are expecting much higher growth in 2021.
2021, they are expecting the higher growth. Okay, that's very good. One question again, it was coming into my mind, which I just have lost out of my mind. I don't know. The question was about the same. Either we should buy it in the investor, like the big investor. Either they will go into the north side of the country to buy the property, or they will the south side of this the country, like London and this side, because these properties are always very the hot to buy. We will come back to this question after the break, and we will discuss the same thing. Either it is good in our point of view to buy in north or south. For my listeners, we have to go into the break, and we have only left less than a minute to go into the break. For my listeners, if they want to ask any questions from my guest, Mr Jamil Akhter, who has taken time out for us and to discuss about the property value and the election results impact on the property value, they can call us on 0333 444 0940, and they can also listen to our program if they are leaving the car and they are leaving the radio. They can listen to this program on their own desktop or on their mobile. Bismillahirrahmanirrahim. Assalamu alaikum. Welcome back to Revive FM, and I'm your host Nawaz Rajapakistani with the program Signature Talk, your own favorite show. It's a weekly show, and today with me is my guest in the studio. It's Mr Jamil Akhter, who is a property and finance consultant, and we are discussing on the impact of election result on the property markets. And we already in the first two parts of the program would discuss in detail what could be the result, and I will say we came into agreement that the property market value will either increase slightly, or at least it will not go down, it will remain stagnant. Yeah, it is our point of view, and again it's a disclaimer for my listeners that they can have their own the research or either what they want to do, but this is our point of view. To participate in the program and to ask a question from my listener, to ask a question from my guest Chaudhry Jamil Akhter, they can call us on 0333 444 0940. Yeah, Mr. Chaudhry Jamil is writing something on it. Stagnant is no growth. Yeah, but yeah, I will say that's what I'm saying. So they can ask us a question 0333 444 0940, and if they are in the car and they are leaving the car, they don't want to miss the remaining part of our program. They can listen this program onto the radio as well by typing in www.revivefm.co.uk. So, Choice, how we are back to the program.
Yeah.
So we were discussing about now in the break. We were discussing where we have to invest nowadays, like for our listeners, and it definitely depends how much money you have in your pocket and what will be the best place to invest for you.
Yeah, it will really depend on the personal circumstances of the person who wants to invest. As I said, if they are looking for income from the property, north of England is better than London, or outside London is better than London. If you are in the center of the London, the yield is less.
Yield is less, yeah.
But you can expect
the growth is very higher.
And
higher
also,
growth.
It's very solid market. For example, if something very, very bad happens to the market,
unexpected happen,
London or central London would be the least affected.
The property value will not go down as in the other part of
so
the
it will not
England,
be like buy one get one free. So it will never be like that. But many regions in the UK will suffer very, very badly
in case if unexpected happen. In case,
for example, in the last recession, so I will not name the regions, but some regions went down by maybe 50%.
Buy one get one free. I remember.
And they have still not recovered, and there are still some areas where prices are actually less than prices of 2007. So
exactly.
They haven't
recovered. They haven't
recovered the 2007 prices.
Yeah, they're so far at the moment.
So they were so badly affected. Regarding your question about the where to invest with, so if someone is looking for income outside London, I would say
like with less money and higher income, they will looking a higher yield.
So and also risk appetite, and they have to see where the market is heading in 5 years or so. So if they buy now and expect, let's say, 10% growth in 5 years, or 15% growth in 5 years, and the rental yield is, let's say, another 7%, 8%, they can even get 10% rental yield in the north.
They can.
And in prime London, you can expect 2%,
3%,
you see, so 2.5%. So something like that. But it's more stable market. It's a better market, and sometime if you can be very lucky if someone just like your property, and that's it. If you get a customer from the Gulf, they just wanted to buy it, and you can actually
make money out of it. You can make money out of it.
It depends on the budget.
On the budget,
and
actually.
the personal preference of the person. If they
are looking for a long-term investment, you are saying then it will be the north side will be the better side for investment, and especially when you have not a big pocket, like they don't have a budget.
I think
that
North,
big budget
North is
in a
offering good opportunities. So even with the the bigger budget, you can still invest in North.
Okay.
Yeah, London. Okay, very stable, very good, darling of investors, everything. Yeah, but at the same time, the prices are very high. Yeah, for the local population, unless the government makes some, the very good investors, it's very difficult to buy for a normal person. In London,
the prices are very high.
Price to income ratio was 14, so you needed 14 times of your average salary to buy in London, which had the recent decrease in prices has helped a little bit. Now you need around 12.7 times income to buy in London in general, and no bank is lending that sort of money, you see. But in the other parts of the country, it's not like that. Yeah, so normal people, especially they're like areas like Liverpool, it's very good income ratios. So it's easy to buy. So you can expect more sales in those regions.
I know I know a couple of people who bought properties in North Side. I have some experience, like the as you were saying, some properties are gone back to the prices of 2007, and they are not recovered. And I remember it's the 3-bedroom houses. You can buy it in 30,000-40,000 pound, like it was before 60,000 pound. But now again they have a chance to buy it, but at least they have some the return by in terms of renting, in case if they are able to rent that house.
Yes, and they need to be careful where to buy it.
Where to buy it, because sometimes if you buy at a place, okay, you finding it very cheap, but
cheap,
it's very hard. It's very hard to rent it out.
Cheap could be cheap.
Yeah. Yeah, it's very hard to buy it. I know one of my friend who bought in Middlesbrough. In Middlesbrough, it was near to the town center. It was not actually too near to the town center, but it was only 2.5 miles. But in those the side of the UK, 2.5 miles is quite a good distance.
Yeah.
So he bought the property in there, and it was a good price. He didn't make a loss out of it, but that property was empty for like almost I will say 1.5 year, and someone they even broken into the property, and it took these geysers and the pipelines and this and that. But he still did not make a loss. But when it was rented out, like he kept this property for 3-4 years, and he was saying when it was on the rent, he was getting a very good return on it.
Yeah,
he was getting a very good return. I will say more than 15% he was getting out of it.
15, I don't know, but 10% is
10% is normal. So it depends on your luck as well. I will say it depends on your luck, but while making an investment, you have to keep in mind these
normally,
type of things.
As a rule of thumb, if you're buying a property especially for investment, and travelings plays a very good part. So if you're buying near the station, right?
Yeah, or near the university.
Near the station, near the university, yeah.
In North Side, yeah.
Yeah. So almost everywhere, you can expect better returns and more stable, and you can also expect for the property not to be empty.
Not to be empty.
Because these are the factors which determine demand. You see. So.
Like even if they are buying on the north side, they can buy near to the Leeds University, Liverpool University, Middlesbrough University.
Spot the location.
Like spot the location.
The location is mother of investment in the property. Yeah. So
just giving an example. Yeah, that's fine.
So location plays a very big part. Wherever you buy.
Yeah, either it's in London or in London they don't have a higher yield. In north side they have a higher yield. But in London, if you want to buy a property, my God, it's out of pocket, frankly, nowadays. It's
but
for
even,
normal people, it's out of pocket.
the central London, okay, very low yield,
Mm.
but more stable market, and the many people in central London, they invest to park their money.
Mm.
Yeah.
Mm.
You can expect some surge in London property sales because Tories are introducing another 3% stamp duty charge on non-residents. So
Okay.
non-residents could be paying 6% extra stamp duty.
Extra stamp duty.
Yeah, basically 3% extra compared to UK landlords.
But does it not affect the property value as well? Because then you have a less money coming out of.
But
the
many
country
people
then.
will buy who really wants to buy, so they will buy before they introduce.
Okay. When they are going to introduce this thing?
I think it's maybe next budget.
In next budget, they're going
Yeah.
to introduce it.
Yeah.
Okay. But you are not sure when they are going to do it.
In next budget.
Yeah. Okay, that's
Yeah.
fine. So you're saying
But
the.
we don't know.
we don't know.
Boris Johnson, he has been saying in the past that he wants to reform the stamp duty rules and regulations.
Mhm.
So maybe if the market, if they really want to boost up the market, they may either delay or scrap the idea. We don't know.
We don't know. For my listeners, they have to investigate this thing themselves.
Yeah.
They have to investigate this thing themselves because we are not sure about this thing as well. So still, I will say if the people like
Yeah,
with the very limited budget, they can go for the property towards this program is, I will say, mostly towards the investment point of view.
Yeah. So
And no,
there is another thing
yeah.
I just wanted to mention to you. So when someone is making a decision to buy in London or in the north, the prices in north are much less compared to London.
Yeah.
So
yeah,
when
very
you buy
less.
one property in London, you pay a lot more stamp duty. But if you invest the same amount in the north, in different properties,
yeah,
in smaller properties, so you can expect to pay much less stamp duty.
Yeah, and you have a bigger house as well.
Bigger house, and also you could buy on, that there are some tax strategies like, it's not our topic. Some people buy on limited companies' names, etc., etc. So there are implications for everything you do. And it would be good to take some tax advice on those matters. But so there are some benefits and drawbacks of doing anything. You see.
Okay, so you're now for my listeners, we are very close to the end of our program, and we have only 2 minutes, I will say, left, and I just want to wrap up all my discussion. Today our program was mostly in investors' point of view, where they will like to invest the money, either in the property. First of all, in the first 2 sections we discuss about the growth of the property market, either it will be increase or remain stagnant, or as we have listened, and now at the end of the program we have discussed, depending on your pocket, either you should do it in a north side of the country investment or into the London side of the country. London property is always very expensive. So I hope our whole this discussion have given you some view, clear up your idea that what will be the impact of the election result on the property. So keep tuning in, and
positive.
Yeah, overall it will be a positive. So hope so we will do one more program on this within a month time, and after definitely 31st of January we will do this program on the again try to focus what has happened till now and what we're gonna expect more. So till the next program, I will thanks Chaudhry Jamil Akhter Sahab, sir. Thank you for coming into my program, and I hope you will take time out next time as well. And to my listeners, keep listening to my program, and next time I will see you in the next week. Till then, Assalamu Alaikum.